Tes.
Ya, siap.
Halo,
Ya.
siang Bu Desi, Pak Adianto.
Selamat siang, Pak Hendra.
Siang.
Halo Pak Hendra.
Ya Pak.
Sebentar, saya download dulu ya materinya ya, sebentar. Unit. Halo, welcome Pak Manjot Singh. Welcome Pak Hari, Pak Kris. Halo, tes.
Welcome Pak.
Thank you Pak.
Thank you.
Halo Pak Hendra.
Halo Pak Adianto.
Kita masih menunggu Pak James Stephenson from Australia.
Oke, siap.
Halo.
Saya standby Pak.
Pak Manjot sudah join.
Hendra.
Pak Kris.
Pak Kris.
Aduh, apa kabar Pak Kris?
Baik.
Udah di Jakarta nih Pak Kris?
Sudah jaga warung Pak Hendra nih.
Wah, nih bolak-balik terus Pak Kris nih ya.
Ada apa? Ada warung kecil, buka warung cabang franchise Pak di Samarinda, jadi harus ditengokin.
Wah, ini warungnya nih.
Maksudnya tambang kecil, maksudnya di sana Pak, franchise apalagi si Kris ini mah. Spesialis sulfur tinggi Pak Hendra.
Oh, spesialis di sulfur tinggi nih.
Jadi kalau ngundang aku lagi jangan ngundang di batubara ya Pak Adi, ngundang di sulfur.
Sulfur ya?
Iya.
Sepertinya harus kita buat khusus ini. Membicarakan sulfur tinggi Pak.
Siap.
Spesialis deh.
Halo Mbak Desi, udah lama nggak ketemu.
Halo Pak Kris, apa kabar?
Baik, Neng.
Sehat ya Pak?
Sehat, sudah di berkali-kali.
Paling sering di tes antigen kayak swab nih kayaknya Pak Kris nih paling sering. Sering bolak-balik ya.
Bolak-balik. Jadi ada tempat kan Pak, jadi seminggu itu bisa 4 kali antigen karena harus ke utara dulu, baru di Kaltim lagi, jadi tiap 2 hari kan. Emang benar-benar ya.
Paling sering dites nih Pak Kris nih.
Terus kalau mau ke kantor harus antigen ini Om. Jadi
harus
walaupun
bawa
di kantor, harus bawa antigen. Walaupun di kantor juga sendirian. Kenapa juga ya?
Udah surat sakti itu Pak sekarang ya.
Om Hendra di mana ini?
Di rumah, belum pernah keluar dari ini nih selama berapa? Ya belum pernah terbang keluar kota nih selama Maret, sejak Maret lah ya.
Bisa keluar kota lah ini aja Pak. Kemarin kemana? Ke puncak ya Pak, lebih asik gitu.
Oh iya. Gunung Salak ya. Dekat-dekat aja kita Pak.
Siapa lagi ya nih Pak Adi? Saya lain Pak ini.
Pak James Stephenson. Halo Pak Manjot, halo Pak. Can you try to speak Pak?
Yes, hi everybody, can hear me?
Oh already Pak. Okay Pak. The audio is already Pak.
Iya Pak Manjot, halo Pak Manjot. From CRU ya?
Yes, hi, good to see you.
Okay, good to see you Pak.
Oke, let me Pak ini.
Mr. James Stephenson.
Mr. James, sebentar, dia minta link balik, link.
Order pertama kan ini ya Pak Manjot dulu kan ya, sesuai urutan ya. Masing-masing berapa menit Pak Adianto? 10, 15?
Maksimum 15 Pak.
15 maksimum.
Bentar ya Pak, ini Pak James Stephenson minta link ulang. Sepertinya ada ini. Oke.
Duh, cuacanya bikin ngantuk nih, ya. Hujan. Iya, cuacanya.
James Stephenson copy.
Kayaknya kita satu daerah deh Pak Hendra. Saya tinggal di Margonda Pak Hendra.
Oh, wah ya Cibubur ya nggak jauh sama ya.
Jadi tiap pagi hujan di Margonda, jadi kayaknya bener-bener males bener bergerak.
Iya deh cuacanya berapa hari. Tapi jogging ya tetap Pak Chris ya rutin ya.
Diupayain Pak biar boleh makan, kalau nggak jogging nggak boleh makan.
Itu disiplinnya. Iya nih sejak WFA malah makin sering itu ya. Dan malah kalau ini jalan sih, sore juga jalan, malam habis makan juga jalan gitu.
Coba jalan di Cibubur itu bumi perkemahan Pak Indra lebih asik kayaknya. Satu putaran hampir 5.
Iya enak di situ. Saya di kompleks aja sih Pak, jalan-jalan. Siang juga kadang kalau nggak ada jalan malam juga.
Bentar ya.
Hi Pak Manjot. So are you joining us from Singapore ya?
Yes.
Okay. CRU. Have we met before, Pak Manjot?
We have met
already, Pak.
Yeah, we have met in our office, yeah.
I think I presented in Jakarta once.
At Sangrila, Pak Hendra.
Yeah.
We met there. Yeah.
Last year.
Oh, I see. A couple of years ago, I received visitation from CRU team.
Yes.
At Indonesian Coal Mining Association office.
I see.
Yeah, it's a couple of years ago. Yeah, to 2019. Yeah.
Yeah. So we are based out of Singapore here, or at least I am, but we are headquartered in London.
I see. I used to meet with Philips. Yeah, Philips. He's in Sydney office. Yeah.
All right. Okay. I can't remember him. Maybe he was there before I joined. Not sure.
Yeah.
Hello, Mr. James. Hello, Pak James.
Your audio, please turn on.
Hey, Pa Dianto, Pa Hendra, how are you?
Hey, Pak James, how I'm doing fine, thank you. Wow.
I'm good, I made it. My computer's been terrible today. I had to set up a new Zoom account, so apologies for being late.
Wow.
Yeah, I guess I was using a personal email or something, so that's good to know. Good to see you guys.
Okay, yeah.
Okay, thank you, Desi.
Can we start, Pak?
James already.
Yes.
Pak Manjot. Okay, Pak.
All right. Shall I begin and try sharing my screen then?
Desi will open it first, Pak. Yeah. Okay, Des. Because it's now 2 p.m. at Jakarta time. I think we're still waiting for all the participants. We have about 300 registered participants now. We expect them to join while we are having the webinar. So I think we can start now with Desi. Please open the webinar.
Thank you, Pak Adi. Ladies and gentlemen, good afternoon. We truly hope you're doing good today. Welcome to webinar Coal Outlook Series 2021, proudly hosted by Coal Asia and Petromindo.com. Previously, we already discussed about domestic or Indonesian coal outlook, then China coal market outlook, India, ASEAN, and today on the 5th series, we will discuss together about Japan, Korea, and Taiwan coal market outlook and supply trend. On behalf of Coal Asia and Petromindo.com, we would like to thank to our general sponsors today, PT Tribhakti Investama and PT Geoservices. We really appreciate your support and trust to our work. Shall we play the video?
PT Tribhakti Investama, a leading survey company, was established in 1989. We expand our services to the coal and mineral mining sector to provide inspection, certification, and laboratory analysis services. Being one of the most experienced surveying companies in Indonesia, we can be your partner to minimize risk by providing accurate, reliable, independent, and timely results for the scope of work that we provide for you with our depth of expertise and knowledge in every aspect of our business process.
Okay. Yeah. Okay. And let's welcome to our distinguished speakers and panelists today. We have the first speaker, Mr. Manjot Singh. He's the Senior Consultant, Commodity Markets, Metals and Mining at CRU Consultants. Hello, Mr. Singh. How are you?
Hi there, all well here. Thank you so much. It's been a pleasure to be here. Thanks a lot for the warm welcome.
Thank you. And you're joining from Singapore, right?
Yes, I am. Yeah.
Okay, thank you very much for your time. And our next speaker is Mr. James Stevenson. He's the Senior Director of Research and Analysis for Coal, Metals and Mining at IHS Markit. Hello, Mr. Stevenson or James.
Hi, how are you? Hi, everybody. Pleasure to be here.
Yes, and you joined from Sydney now?
From Sydney, that's right.
Okay, thank you very much for your time today. And let's welcome to our third speaker, Bapak F. Hari Kristiono. We can call him Mr. Pak Heri. Pak Kris, sorry, Chief Operating Officer PT Medco Energy Mining International. Halo Pak Kris.
Halo semua, hi, how are you?
Hi, thank you. Thank you very much for your time, Pak Kris. And let's say hello to our moderator of today, Bapak Hendra Sinadia, Executive Director of Indonesian Coal Mining Association. Halo Pak Hendra.
Halo Bu Desi, makasih.
Thank you very much, Pak Hendra. And as usual, we would like to remind you that you can write your questions on the Q&A sections. All of your questions will be discussed later on the Q&A sessions. And also we'd like to inform you that we're live on YouTube. If you cannot join us on this Zoom webinar, you can write your questions on the comments column, and we will try to represent it on this webinar. Thank you, and let's continue to Pak Hendra as moderator. Please, Pak Hendra, time is yours.
Okay, thank you, Bu Desi. Good afternoon, ladies and gentlemen, all the participants, sponsors, and panelists of the webinar today, the fifth webinar, a coal market series webinar hosted by Petromindo and Coal Asia. As Bu Desi said, that we have covered other important markets such as China market, India market, and also Southeast Asia market. And now we are going to discuss the important market, especially for Indonesians exporter, which is the region we call JKT, abbreviation of Japan, Korea, and Taiwan. As we know that JKT is a very important traditional market for Indonesians. Last year, I believe, is more than 90 million volume of thermal coal exported to these regions, and country is among the best performing countries in dealing with the pandemic COVID-19, especially Taiwan is one of the best performers in the world in terms of how the country dealing with the pandemic. And today is a very important one because as the world has changed because of the pandemic, and now there is some changing the trend on the coal market. So it's quite important to listen to the experts of the today webinar on the potential market in these regions. As a moderators, I of course personally I learned a lot from all the experts since the first series until now. Then hopefully this will benefit us for the associations to communicate as a front line in communicating with the government also and the stakeholders. Yeah, as I mentioned, the JKT region, JKT market is very important, and during the pandemic, the positive side is the three countries has recovered very fast, faster than other countries, even Taiwan outpacing China in terms of the economic recovery, and the potential of the increase of the coal demand from Japan, especially as Japan will be hosting the biggest event of the years is Olympic 2020, which will be held in Japan sometimes in July or August this year's, and also Korea is a very important. But on the negative side, we have heard that those countries are trying, very hard. They do their best to do the transformations, the energy transition from dependency or of reliance on the fossil fuel to the renewable energy. As you know, South Korea is among the country among the three that which are very aggressive in reducing the fossil fuel in their energy mix generations. We heard recently that South Korea trying to reduce the coal in their electricity mix, energy mix, in 30% within 10 years by 2030, and it will reduce, of course, the supply of coal to South Korea. If we look at the internal, policy of Korea, by reducing 30% of the coal in the 2030, it will impact roughly about 17 to 18 million equivalent of the coal NAR 5700. So we are going to listen the development on the markets. What is the potential in the 2021? What are the challenges? And also for Indonesians' perspective, what are the quality specification needed by the markets, and what is the minor perspective to cater the potential market in JKT region. Okay, without further ado, I'll give the opportunity first to Mr. Manjot Singh. He's a senior consultant, commodity market, metals and mining from the consultancy CRU. He's joining us from the Singapore. Okay, so Mr. Manjot Singh, your time is 15 minutes maximum for the presentations, please.
All right, thanks, Pak Hendra. Can I share my screen then?
Sure.
Okay, just let me know when you can see it.
Yeah, it's clear.
All right, great. So again, thank you so much, everybody, ladies and gentlemen, for joining this webinar. Of course, as Pak Hendra said, we will be talking about the coal markets in the next 15 minutes or so. Of course, I will be giving a global picture of our coal market outlook, but of course, the JKT market and the Indonesian supply will be an integral part of what we will be discussing in the next 15 minutes. All right, so without further ado, I will just quickly kickstart my presentation and just a very quick update on who we are, CRU Group. Of course, I'm representing my company, CRU Group. We've been around for more than 50 years. There are mainly 4 pillars of business. One is the regular market analysis that we do on commodity markets. Second is price assessments. Third is consulting, which I'm representing today. And of course, fourth is events. So in consulting, of course, we specialize in advising our customers on strategy development, asset and project valuation, and of course, carrying out due diligence for various policy and other supporting activities. As I mentioned, CRU has been around for more than 50 years. Our experience allows us to kind of analyze nearly any element on the periodic table, as you can see on the screen. And of course, not only this, we also have a dedicated team of analysts that cover the metallurgical coal and thermal coal markets. So without further ado, just a very quick snapshot of how prices have behaved in the thermal coal market in the last 1 month or so. I won't be getting into the details of this. I'm assuming most of us already know what's happened. The clear messaging that we are getting here is that thermal coal markets have been very, very buoyant. Coal prices have increased significantly throughout the complex in the last couple of months. Of course, we've seen very, very strong demand from China. After the pandemic struck there in February, there's a very strong rebound in China, and that story has virtually continued throughout the rest of the period. Another thing important to note here is that the domestic Chinese market has been extremely tight. And not to forget, JKT markets have had a huge role to play as well in this recent price swing. The cold spell in Japan and Korea, led to, of course, extremely high LNG gas prices, which of course spurred to the coal markets as well. I think sometime in in January, the LNG spot prices were trading close to $30, which probably is an all-time record. So that just goes to show how much energy was required uh, to be met from the coal market, and as a result of that, thermal coal prices have been extremely strong most of the last couple of months. Another very important theme that a lot of us might have heard in the market is the recent trade tensions between Australia and China. As you can see in this chart, Australia used to comprise of almost 20% of coal supplies on the seaborne market to China. However, since the import restrictions were carried out, especially in October, you can see that coal exports from Australia to China virtually went to zero in December. However, one of the big beneficiaries of this trade tension between the two countries has been Indonesia. So just look at what extent the Indonesian exports to China have increased in December, when China kind of relaxed the import restrictions on countries outside of Australia. So throughout the year, of course, Indonesian exports were almost range bound, but in December we saw a huge uptick in Indonesian exports to China. Again, long story short, the story that I'm trying to paint here is that while we think that a permanent ban on Australian coal by the Chinese authorities will be unlikely, but at least in the short term, we are seeing very, very strong demand for Indonesian coal from the Chinese buyers. And this chart is testimony to that. As you can see that in December, imports by China of Indonesian coal were very, very strong. Of course, one would imagine that since Australian coal has been restricted by China, Australian coal producers would suffer. That hasn't really happened, at least on the thermal coal market. I would say that Australian met coal producers have suffered more than Australian thermal coal producers, because a lot of this demand increment has been absorbed by Japan, Korea, and Taiwan. So as you can see, despite the very, very strong restrictions on Australian coal, total coal exports from Australia have actually increased in December, which again stems due to very, very strong demand from Japan and Korea. So at least for now, Australian producers have been safeguarded by extremely strong demand that we are seeing from the JKT market. Again, a very quick snapshot of what we are projecting might happen in seaborne trade in 2021. We already know that 2020 was a dismal year, not only for thermal coal trade, but for various other commodities as well. Global thermal coal trade fell significantly. However, we are expecting that 2021 will be better, but only marginally. So our forecast is that global thermal coal imports will increase by about 27 million tons in 2021. The biggest gains, of course, will come from India and Southeast Asia. But again, the JKT market, as we have already seen, is strong, will also exhibit positive growth for thermal coal this year. In terms of supply, as I already said, Indonesia seems to be one of the beneficiaries of the recent spat between Australia and China in terms of their coal trade. So we do predict that Indonesian exports will see the strongest growth in 2021. Colombian exports will also increase, but remember that will be from a very low base. Colombian coal production last year was hampered due to strikes and various other reasons. So therefore, although Colombian coal exports are increasing, they're only increasing from a very strong base, a very low base. But Indonesian exporters seem well poised to kind of meet up for most of the demand increment that we are predicting this year. Also, another thing that I like to mention here is that if I don't have that chart on my slide deck today, but I was just having a look at a couple of analysis that one of my colleagues have done. So if I just plot the global thermal coal industry cost curve, at current prices, I saw that about 85 to 90% of the thermal coal producers are generating positive margins, or in other words, they are either able to break even, or in other words, they are making very strong profits at current prices. And for those reasons, we do think that Indonesian producers as well will be able to kind of lift production quite comfortably, because currently we are in a favorable pricing environment. So long story short, the biggest gains to come from Indonesian supply this year. Just moving on, just shifting gears and moving over to the JK market, especially Japan and South Korea. As the moderator already said, that coal is an integral part of their energy mix. It of course comprises of more than 13% of their total power generation mix. In the last few years, of course, thermal coal has been a very, very important source of energy for baseload power generation. However, yes, in the coming years, things might change slightly. First of all, however, I would like to clarify that our projections for 2021 are still positive for the JKT region. As you can see from the table below, we expect Japanese thermal coal imports to increase by 5 million tons in 2021, whereas South Korean thermal coal imports could stay flat. In the medium term, one question that might arise is that what is causing thermal coal imports to fall? First of all, if we just focus on Japan, the country has pledged to go carbon neutral by 2050. That in itself clearly means that there will be less room, or not a lot of room, for coal to be in the power generation mix. Secondly, nuclear generation poses quite a bit of a threat to the Japanese power mix as well. If my primitive understanding is correct, of the 60 nuclear reactors in Japan, only 9 are currently operating. However, Japan has succinctly stated that an increasing share of nuclear generation in their power mix will be critical if they have to meet their 2050 targets of going carbon neutral. So we do believe that there is some upside for nuclear generation in Japan, which will curtail coal-fired generation. And not to forget, in a drive to go carbon neutral, renewables will be the biggest beneficiary. And that is what we are predicting, that at least in the next 5 years, renewable capacity in Japan and renewable generation in Japan will increase significantly, which, although will not provide base load, it will still kind of lead to some disruption for coal-fired power generation. Gas and nuclear modes of power generation remain the biggest threats to the Japanese power mix in the next 5 years. So due to these reasons, we are predicting that Japanese thermal coal imports will actually fall from about 120 million tons in 2021 to about 98 million tons in 2025. When it comes to South Korea, their strategy is slightly different to Japan, because South Korea is not a big fan of having nuclear generation in their power mix either. So yes, the plan is to phase out nuclear power generation gradually in South Korea, but we think that will happen gradually, and coal-fired generation will be the first one to suffer in South Korea. I think the government authorities have already been very clear that they want to convert about 20-25 coal-fired power units into gas-fired power units in the next 7 to 8 years. And just like Japan, South Korea remains very, very optimistic in terms of their renewable energy targets as well. So overall, yes, while 2021 might be a good opportunity for Indonesian producers to ramp up supplies to the JKT region, but eventually, because of the government policies and because of the reasons that I just stated, we do think that thermal power generation, especially coal-fired power generation, is facing quite a bit of headwinds in these units. If I was to just very quickly give a bird's eye view of the global thermal coal trade, we do not think that global thermal coal trade will contract. In fact, it will increase by about 4% in the next 5 years. And of course, the biggest increases will come from Southeast Asia and South Asia, particularly India. So the decreases in Europe and JKT will be more than offset by emerging economies such as Southeast Asia and India, which means that thermal coal trade will increase by about 4%. In terms of supply, we are actually predicting that Indonesian supply will, or rather Indonesian exports will fall off slightly, because of competition from other low-cost producers such as Australia and Russia, and also because of growing domestic demand in Indonesia. So for now, the biggest chunk of supply growth that we are forecasting in the next 5 years, 4 years is from Russia. But there is a challenge there as well, which I will explain in a few moments from now. All right, so I did mention that we are predicting very strong supply growth from Russia in the next 5 years. But for somebody who's been, if any of you has been following the Russian authorities, there have been a bit of contradicting statements that have come about from the Russian Ministry of Economy and the Russian Ministry of Energy. So the yellow bars on your screen denote Ministry of Energy's projection of coal supply in Russia in the long term, whereas the blue bars denote the Ministry of Economy's forecast of coal supply in the coming years. And you can clearly see that there's a big contradiction. While Ministry of Energy is implying that coal production in Russia will continue to increase significantly, Ministry of Economy has actually significantly downgraded their expectations of coal supply from Russia. Big reason behind that is that Russian railways is a big revenue generator, of course, for Russia. And Russian railways has been suffering because it has been offering huge subsidies to thermal coal producers in Russia in order to supply coal. Since coal prices were relatively low, not too far back, the health of the Russian coal producers wasn't that great. And in order to support them, the Russian railways were offering significant subsidies to thermal coal producers, especially, not that much to met coal producers. So as a result of that, Ministry of Economy feels that if again the thermal coal prices fall in the coming years, this subsidy policy of the Russian railways will not be sustainable. And for those reasons, they are saying that Russia's coal supply growth might not be as strong as the Ministry of Energy is forecasting it to be. However, if we just talk about things that are happening on the ground, one of the big challenges that Russia faces is to kind of shift its infrastructure from west to the east, because of course Europe is slowing down. And JKT and other emerging economies is the one that Russia really wants to focus on. As a result, there's a need for a lot of port capacity to be built, a lot of rail capacity to be upgraded in Russia. We do think that that is happening, although not at a very, very rapid pace. And while our market participants have told us that yes, there has been a lot of progress that has taken place, we also remain conservative in predicting our upside for Russian supplies. But this is just something that we wanted everybody to be aware of, because if Russian supply doesn't kind of generate the kind of numbers that the Ministry of Energy is predicting, then again it will be a positive for Indonesia as well. Because in Asia, Indonesian producers will pretty much be competing with Australian and Russian supplies. Not to forget, there's not a lot of new greenfield capacity that is coming online in Australia. That's a good sign for Indonesian producers. The biggest threat for them was supposed to be Russian producers. And now this is a very, very new development that there's been a bit of a contradiction. So this will make for some interesting viewing in the coming years. I think this is my second last slide. I'll try to wrap it up in another couple of minutes. One question that we get asked a lot is that are banks backing out of financing coal mines? It's no secret that coal has a bit of an image problem. If you just read the articles that are printed by international media, it has a bit of an image problem. Coal doesn't get a lot of good publicity. And as a result, a lot of stakeholders have been predicting the death of coal for quite a few years. But if we just look at the exact numbers, for now at least, or at least between 2016 and 2019, that has told us a different story. So essentially, I've plotted a chart of international banks and their exposure to coal mining between 2016 and 2019. And as you can see, most of the banks increased their exposure to coal mining between 2016 and 2019, which goes against popular opinion. One reason behind this is also that coal prices were very, very strong between say 2017 and early 2019. So that just incentivized lending to the coal miners. Again, the story that I'm trying to paint here is that even after the Paris climate deal, as people were predicting that financing to coal miners will stop, it did not happen until 2019. But we think that 2020 has been a bit of a landmark year as a lot more of the countries have actually pledged to go carbon neutral, and a lot more asset management companies and banks have specifically targeted thermal coal. If you talk about met coal and thermal coal, the people like BlackRock and some other asset management companies have succinctly stated that they are now not in favor of financing thermal coal mines, but met coal producers are still okay. So we think that while financing did not stop until 2019, 2020 has been a bit of a landmark year, and from now it won't be easy to get access to capital, especially if you're a pure play coal producer. So what that means is that we think that the thermal coal market balance could actually become tighter in the next 4 or 5 years, because I already said that the demand for thermal coal imports is slated to increase by about 4%. Whereas, as more countries are pledging to go carbon neutral, of course, a lot of expansion is taking place in renewables and in some countries in nuclear generation as well. And coupled with the fact that banks and asset management companies are going to go very, very hard, and they're going to tighten lending to the coal sector. For those reasons, we do not think a lot of additional greenfield or even brownfield coal supply will come online in the coming years, which will relatively tighten the market, which according to our analysis would again bring the Newcastle 6000 index to average close to $90 per ton in the medium term.
Okay.
Last
minute. Yeah.
Yes. Very, very quick slide on met coal. Long story short, what we are trying to imply here is that the demand for met coal will increase at a more rapid pace than thermal coal in the medium term. I don't have time to explain this in detail. If you remember, we are predicting thermal coal demand to increase by about 4% demand for imports. If you just compare that to its cousin, which is met coal, we are predicting that global met coal imports will increase 13%. Driven by increases from India and Southeast Asia. Unlike thermal coal, the JKT market will stay relatively flat in the medium term for met coal demand. That's all that I had to say. Thank you so much, everybody. Happy to take any questions if you have.
Okay, thank you, Mr. Manjot Singh from CRU for the presentations. There are some key points from your presentations in the positive side, that in the short term, in the 2021, it's still positive, especially for Indonesian exporter. But in the medium term, we're talking about 5 years or beyond. Yeah, it's gonna be very challenges. Yeah, because of the issue of the carbon neutrality, as China's government has pledged to become carbon neutral by 2060, and the other countries like Japan, Korea will be followed the suit by 2050. Yeah, if you mentioned about. So it's gonna put pressures on the coal consumption in the regions, and the competition with the gas, especially in South Korea, will be intensified. That coal portion in the energy mix, power generation mix in South Korea will decrease. Yeah, in the 5 years, 10 years next. And yeah, the competition with other suppliers, especially Russia, yeah, is something that we need to pay attention closely, yeah, for Indonesian exporter. Oh, thank you very much, Mr. Manjot Singh, for the presentation. We'll get back to you in the Q&A sessions. Okay, the next presenter is Mr. James Stephenson, yeah, from IHS Markit. He's joining us from Australia. James Stephenson is a senior Director of Research and Analysis of Coal, Metals and Mining from IHS Markit. So, okay, please, Mr. James Stephenson.
Thank you very much, Pahendra, and thank you, Petromindo, for having me here. Thank you very much, of course, to all of the sponsors. We can't do these things without you, and thank you to the audience, of course, too. I very much enjoyed that presentation by Mr. Singh, and let me just share my screen here. We have a broadly similar topic, so I'm glad I sort of picked a few different angles, and let me just get this thing. Okay, can you see my screen now?
Yes, Pak.
Terrific. Okay, so yeah, again, looking at Japan, Korea, Taiwan, it's interesting these are such important countries for coal, they tend to get talked about a little bit less because unlike countries like certainly China and India, other parts of Southeast Asia, they're a little less volatile. But certainly what we're seeing is a bit more volatility, a bit more uncertainty creeping in terms of the demand outlook. Look, key takeaways, certainly, as Mr. Singh noted, we saw fairly substantially reduced imports in 2020. Worth noting, by late 2020, all three had strengthened somewhat, but certainly some lingering impacts that I'll talk about when I look at these kind of country by country. Imports in 2021 will not return to pre-COVID levels. We think they will strengthen from 2020, but nowhere near back to 2019 levels. In the longer term, coal imports into all three countries will wane. And these are generally owing to active efforts to reduce reliance on coal. For example, because of carbon neutrality targets or general government pushes towards being greener. Coal gas competition, this has sort of been a topic for a number of years. It will continue to impact coal demand. On an economic basis, it's unlikely to have a major impact. Insofar as it does have a potentially major impact, that will be because of regulatory pushes that favour gas over coal, not most likely because of straight economics. And then something I'd like to spend a bit of time on is, as Japan, Korea and Taiwan decline, we'll see Australian coal get displaced from those markets. We'll also see displaced, a little bit of displaced US and Canadian and Russian and Colombian. Now, of course, we'll also be displacing some Indonesian coal from particularly Korea. So there's going to be a new kind of competition dynamic. Now, obviously, we have a current trade war between China and Australia, and I would argue there are some lessons that can be learned from how Australia is reacting to getting displaced. And some of those lessons, I think, can be applied to the Japan, Korea, Taiwan situation in coming years. A snapshot of, I love waterfall charts, and I know that Mr. Singh does as well. But I think they're a terrific way to illustrate kind of a snapshot of the market. You can see here the decline in 2020 was drastic, somewhere around 70 million tons. The biggest downsides were Europe, India, and then South Korea was third. Japan, Korea, Taiwan lost in aggregate about 23.5 million tons of imports in 2020. We think they probably get back about 10 of that this year. And really that's a function of a significant amount of the losses that South Korea in particular saw becoming permanent. And then Japan and Taiwan, we do see some upside, not a lot, but it's certainly going to take more than 1 year to get back to normal levels. Apologies if you can hear kids laughing in the background. Worth just noting, this is a snapshot of global coal trade, and this is data from our Commodities at Sea platform. So this is vessel movement. It's not trade data, and you can see a real slump in 2020, really starting in April, and then you can see ever so slightly in the second half of the year, there was a strengthening as industrial demand returned, as we came out of the shoulder season and into the winter, and then December quite strong. Now, December, despite being strong, not quite back to levels of say March 2020 or December 19, but certainly in general, this speaks to pretty decent recovery. January down a little. January's tend to be down a little. A function of Australia pushing exports in December relative to January, but overall, things are definitely better. Let's have a look at the same chart just for Japan. You see certainly that same strengthening in the second half of the year, but it really wasn't getting back to kind of 2019 or Q1 20 levels. December December was the the strongest since COVID hit. January then very strong. We take that as a function of partly strong Australian loadings, but also the winter and just underlying stronger power sector demand. We do think that Japan probably recovers for maybe 5 million tonnes this year, depending just how the winter ends up impacting. But that's not matching its loss in 2020. Guys, I forgot to set my timer, so yell at me when if I'm going long. South Korea, a bit of a different situation. It was impacted by COVID, certainly, but the COVID impact came after the sort of Q1 restrictions that Korea brought in, which already led to weak imports. So COVID doesn't stand out nearly as much for South Korea. Now, import restrictions around sulfur content in the earlier part of the year, and then winter pollution emissions control policies are both combining to reduce coal import demand into Korea. And this is something that will continue post-COVID, and it's really going to reduce the amount of coal that Korea is going to import going forward. We do think that Korea recovers somewhat from 2020. I think Mr. Singh said they thought that imports into Korea were going to be flat. We expect up 5. I certainly wouldn't terribly strongly argue against a flat outlook. We do see a little bit of strength there, also in part because we've been hearing lately about potential relaxing of winter controls owing to the cold winter, but certainly the key point is it's not going to be up anywhere near the 15 that was lost in 2020. Taiwan, Pahendra said right at the start that this might be the country that did the best. A bit of a grim comparison, but the best in terms of managing COVID, certainly one of the best. And COVID really didn't have a major impact on Taiwan demand. We think that imports are going to end up being down. They were down 2 million last year. That was really a function of kind of a weaker Q1 2020 before COVID even had a major impact. And then this year we think that they will be up about 0.6. It doesn't match the 2 million because last year they had a strong summer. So Taiwan really a bit of a muted impact and relatively steady state for 2021. What does all this mean for Indonesian suppliers? Now Indonesia obviously exports to all three, but strongly to South Korea, meaning that the losses that we expect in South Korea will impact Indonesian coal. And because we're not going to see a whole lot of recovery, this is bad news. How much this really matters for aggregate Indonesian exports is very much a function of how long trade restrictions and the trade war between China and Australia continues. This chart I have here is Indonesian exports to Korea, Taiwan, and Japan combined. And you see, as the year advanced, those exports waned. Now, that's interesting because we did see some strengthening, in particular in Japan. But because of the Chinese Australia trade war, we had more Australian coal pushing its way into Korea and Japan, and that was effectively displacing some Indonesian coal. So, as we've been saying, everyone's been saying for weeks, we have a strong, obviously, story for Indonesian coal to China right now, but that's at least being partially offset by some losses elsewhere as Australian coal pushes into those. switching a bit to the long term, I don't think our outlooks are probably wildly different from CRU's. We do have Japan, Korea, and Taiwan all declining. Note that these charts include metallurgical coal in the bottom two colors, so the rate of decline is a little bit muted. I put China in here as well, really, because there were 4 boxes and it was better than leaving one blank. But noteworthy that it is also, we expect, going to decline. That's obviously a big Indonesia market as well. So, the key takeaway is that Indonesia is going to lose, is looking at markets that are going to decline, big, older, traditional markets that are going to decline, and Australia is looking at exactly the same thing. Threat from Australia. As I said, Australian coal, as we all know, has been displaced from China. The chart in the top right shows Australian coal to Japan, Korea, and Taiwan combined. And you see December was very strong. We already have the official stats for that. Vessel loadings out of Australia destined for those 3 destinations were basically just as strong in January. So you can see how, even though Indonesia to those destinations is lower, part of the reason is that some of that Australian coal is going in. Now, would Australian coal to those destinations be as strong if it weren't for the cold weather? No, of course not. But certainly this also speaks to how Australian marketers have been pushing Australian coal elsewhere. The chart in the bottom right is Australian to India. Now, I know that's not the topic of today's webinar, but it is very stark. I mean, Australia's been picking up well north of 2 million tonnes a month, which annualizes to probably 27, 28 million tonnes a year if that were sustained, which is more than half of what Australia's losing into China. That is to some degree going to come at the expense of Indonesian coal into India. So, I think the reason I'm showing some of these things is that we're seeing, as Australian coal is getting displaced from a key market, how Australian suppliers are reacting. And in exactly the same way as Australian high CV coal gets displaced gradually, slowly out of Japan, suppliers will look for a home for that. As a range of Australian qualities and coals from other sources are getting displaced out of JKT combined, they will look for a home elsewhere. So you'll get subbituminous coal from the US and from the Vista project in Canada, looking for another home. You'll have Colombian coal looking for another home. You'll have plenty of Australian as well as the Indonesian. So really, it's a lesson of, I think, be very aggressive cultivating new markets, growing markets in the Indian Ocean and in Southeast Asia as much as you possibly can, trying to be first entrant. And I really think there will be benefits to those. Look, this slide isn't meant to be there, sorry. Just coal gas competition, we've obviously had very, very strong LNG prices. And if you look at, these are just some charts, I won't go into detail, but it's the difference between the dark spread and spark spread in Japan, just kind of illustrative for coal gas competition. Grey is spot prices, and if the line is negative, then coal is favoured. If the line is positive, which it rarely is, then gas is favoured. And you can see how strong LNG prices recently have swung that spot competition very strongly in coal's favour. Worth noting, as time goes on, the amount of kind of well out of the money contract gas is declining. And so if you look at the green line there, the average, which is average of spot and contract, that has been definitely still in coal's favour, but has been moving towards better economics for gas. Now, we don't think this ever solidly favours gas, but it is always something to keep an eye on. And coal is certainly vulnerable of regulatory efforts to undermine it, as we're seeing in Korea in particular, and to an extent in Japan and Taiwan, and likely will more over time. Look, I think I'm past 15 minutes here. Just our price forecast for the near term that people can have a closer look at when presentations are circulated. We have very strong prices right now. We think that they are significantly a function of cold weather in Northern Asia, some supply issues in China and elsewhere, and certainly and rainfall that's sort of gone long in Indonesia. We think as Q1 advances and certainly into Q2, we'll have prices coming off somewhat, but certainly staying at reasonably strong levels. With that, I think that's my. I think we can skip the summary. I'll leave it there.
Great. Thank you very much, James Stephenson from IH Market, for the very insightful information presentations. Very informative. In the JKT market, it's used to be in the past. JKT market is we considered as a stable, or much less predictable market. But since a couple of years ago, and then maybe in the next 5 years, it will more volatile, in the JKT market. So competition with the gas also one of the important point, and also the coal to gas and price outlook, I think in the first quarter as predicted is remain strong, but Q2 and Q3 will slightly decrease. So okay, we'll get back to you in the Q&A session. Thank you very much, James.
My pleasure.
Okay, we've listened to excellent presentation from Manjit Singh from CRU and James Stephenson from Edge Market. For those of you, the participants, would like to address the question, please do so in the Q&A column. And for the presenters, if you would like to respond it directly, feel free. Okay, the last presenter is our friend Pak Hari Kristiono. Pak Kris is the CEO, Chief Operating Officer of the Medco International Mining. He's been, back and forth, regular flyer Jakarta to Kalimantan and recently Samarinda and also the Kaltara, Pak Hari Kristiono.
Yes.
Yeah. Okay, silakan Pak Hari Kristiono. What is your miner's perspective and looking at the prospective market in JKT? We know that you are one of the suppliers, especially in the market of Japan. You have a very specific characteristic of coal that you targeted certain specific market in those countries. So what is your view in the JKT market? Pak Kris, is 15 minutes also the allocated time?
Thank you, Pak Endra. Interesting presentation from James, also Pak Manjot about this JKT market situation, and also the seaborne trade. And Pak Adi atau Bu Desi bisa di-show in my PPT, aku takut bisa lihat. Okay, thank you. So I would talking in the minor perspective about this JKT coal market situation. This is a picture of our two mining in the Nunukan in the North Kalimantan. This is high sulfur coal mining that mainly to almost 85% goes to the cement plant, and the other is new mining in the Samarinda. This is operate just in this November. So this is also high sulfur, also targeting to the cement and also smelter. Next slide, please. So talking about the Indonesian coal resources and reserve, and that we are showing, and Indonesian will be dominated by below 5,000 GR and also 6,000 GR. And this is the definition of the low CV is below 5.1 GR, and also medium is within 5.1 until 6.1 GR, and high is within 6.1 until 71 GR, and very high. But actually the very high is only 2%, and now mainly is our production or reserve now in the medium CV within 5.1 until 6.1 GR. So this is the mapping of our coal. Mainly is below 5.1 is GRs is in the Sumatra. It means it's below 5.1 is actually for the government, because this is data from Indonesian Geological Agency. So they're not separate between 4.2 or 3.8 or 3.5, but actually, as you know, and from Sumatra is mainly is below 3.8 GAR. But above 3.8 is until 5.1 is going to the Kalimantan. So this is the resource and also the reserves as of 2019. Next slide, please. So it's mean the medium and the low CV will be dominate in the future of the coal production in Indonesia. And this is the picture of Indonesian coal production that for the 2020, actually production is plan is 558 and plan is 550, and actually we are a little bit higher, 101%, and export is also a little bit higher, is 108%, and that we have a reduction in the demand from PLN, also other industry from domestic, so around only 85%. So this is the picture of our last year, that we show even the coal price. That means the coal price is government index, HPA, that saying the last year's average is around $60. Is a little bit same in the same situation in the 2015 when the market crashed. HPA also around $60. But again, is we are higher the production rather than 2015. 2015 production is 462, but now in the last year, the 2020 is 558. And next in this year, the 2021, so the government is targeted production is 561, with the domestic is 138. And we do hope that we can hit the 138 for the, especially for the PLN, and to hope the vaccine and the COVID and the spread of the virus will be quite solved, so the domestic will be growth again, especially when the government asking for the downstreams. So this is the car target for Indonesia. So it's mean the domestic plan will be increasing from 138 to 139 until 152 in the 2024. So this is the plan of the government. Next slide, please. And this is the picture of our Indonesian coal export by the country. So we can see GKT still become top 5 destination country. But again, is we have that Manjot and also James also mentioned it. We have a competition with Australia and Russia, and also the other country like US and Canada for especially for the GKT, because the freight will be, they have advantage in the freight. So that we see in the 2019 until to 2020, the GKT is still top 5, so around 5 to 7% from export from Indonesia to this country. So that China and India is still number 1 and number 2, but you can see Japan, South Korea, and also Taiwan is number 3 and 4 and 5. So it's mean that you can see also that the Japan is majority is below 62, and South Korean is below 62 NAR, and for the South Korean is below 55 NAR. Taiwan is almost same with the Japan is below 62. They're 62 GAR, so below of the Japan. So it's mean, but the main buyer is little bit same, and the competition, especially for the Japan, is from Russian coal, and also Colombia and Australia, and also the typical of the buyer of the Japan and South Korean is different. Also Taiwan. Taiwan usually is by tender and low sulfur. So this is that typical of the GKT in the term of the coal quality. So for us, it's important to knowing which quality that will be we can perform, and what country, the production coal country that will become our competitions. Next slide, please. And this is the Indonesian coal quality export fact that we see for the 2015 until the 2020, and the plan 2021 is below 42 NAR or 448 GAR will be shortly subs by 5,000 NAR. So it's mean that 5,000 NAR will be subs with the 42 GAR 448 GAR. So it's mean that will be what next if our premiums coal quality will be elapsed, especially for the GKT that usually, especially for GKT that that prefer of the high CV coal rather than 42 GAR. So it's mean that it's challenging. So the next that we have to thinking is how to make a blending strategy or blending facility. So it means we can still have at least 5,000 GAR rather than 42 NAR. That will be help our market to compete to the Japan. Even we know that Japan, the coal GKT coal demand will be elapsed, but again is we have to changing our we call it a transport and logistic to reduce our brand and to make a blending plan, so to make blending facility to make sure so we can compete in the right price. So that what we are proposing for the government is blending facility like we built a 5,000 GAR in the Balikpapan and below 4,000 GAR is in the Sumatra. So that's the idea how to live to make sure we will have a long maximize our coal quality. Next slide, please. And this is the data from EH market. So we see such as for the 5,000 GAR that almost is mainly goes to the Korea and Taiwan and China also, and India. But again, is we compete with a Russian and South African. But again, South African is too far. But this the Russian. But I'm a little bit happy with the Manjot say that they're having problem with the economical of the coal, especially for the steam coal from Russian because the cost of transportation. So again, is this is 5,000 GAR for the GKT market. Next slide, please. And this is the CV62 GAR for the Japan that we see is agree with the AHS James that modest coal demand will be declined over coming decade, and that will be we have an advantage from the nuclear that will be supporting your coal demand because they will be reducing the nuclear. But again, is I see the question about the renewable energy, and they will be also challenging for GKT. But again, is the main issue in the GKT is coal gas competition, and will be how low can you go that we can see the competition. Next slide, please. And this is that our project in the North Kalimantan. This is in Nunukan, North Kalimantan. We are producing high CV, high sulfur. We are producing 6.5 GR, sulfur is 3.5. And the new mining in the Samarinda is 6.5 GR and also 2% sulfur. We are producing now mainly for cement market. Next slide, please. And this is our targeting this year. We will develop 2 shipment a month to the cement plant and also smelters. The first shipment for the new mining in Samarinda goes to the smelter of Antam, Aneka Tambang, and also the Valley in the Sulawesi Island. So this will be this market for the smelter nickel mine. Next slide, please. And this is the conclusion that we see Jakarta still become top 5 export destination of Indonesian coal. And also we see CV's 5,000 GR mainly consumed for GKT end users, so that for DMO or downstream gasification could prioritize below 4,000 GR or say 3.5, 3.2 GR for the downstream, because if we are selling, if they use also ICV will be interrupt the GKT market, or we will compete with the GKT market. And also the number 3 that we see is Russia will become real due to the freight advantage for the GKT end user. And that's the propose for the government is developing blending facility or coal terminal become option in order to reduce coal brand variety, because we see we have now is almost 85 coal brand starting from HPA, marker, and also SPP. So why don't we be talking about to make a blend and so on, only make a 5 or 2 brand, and after that is focusing to the each market, the country. I mean, they focus to that each country. So this is that the cooperation that we see in the minor perspective for the JKD. Thank you very much, Pak Indra. Next slide, I think that's closing. Next slide. Okay, thank you, Pak Indra.
Okay, thank you very much, Pak Hari Kristiono from Medco International Mining for the presentation. So very interesting, yeah. You're targeting mainly for cement market, having high sulfur on your products, yeah. So it's a very specific target, and you suggest for a blending of in the coal terminal, yeah, to mix the product, yeah, to cater the market in the, especially in the JKT market. Okay, yeah, thank you for the presentations, and now we moving to the Q&A sessions. So far, yeah, there are a couple of questions from the audience. So first, I would like to take question from Pak Bambang Wardono. Yeah, the question is for all speakers. Yeah, starting with Pak Manjot and then followed by Pak James and then Pak Hari. The questions is, how do you see Japan, JKT, Japan, Korea, and China, yeah, will procure their coal as renewable, penetrating strongly in their grid, causing demand fluctuate more unpredicted? Mr. Singh, your turn first. Yeah.
All right. Okay. So how will Japan, Korea, and China procure their coal?
Right.
First of all, in terms of China, I'll begin with China. Okay, I must tell you that I don't follow thermal coal on a daily basis, but yes, I do know that China faces threat not only from growing renewables capacity, but at least since 2016, when Chinese government, launched their massive restructuring program in the coal industry. Whatever new greenfield capacity build-outs had been planned in China were all thermal coal projects and not met coal projects. So what we think is that, of course, renewables and competing fuels are a big threat to Chinese imports. On top of that, we are not saying that Chinese domestic coal production will fall as well. In fact, domestic Chinese coal production will increase slightly. So I would be mindful of that as well. So in terms of that, we do think that Chinese coal imports will actually fall off slightly in the next 4 or 5 years. But yes, there will continue to be demand for lower CV coals from China. I know China has embarked on this massive program to retweak their energy mix. But I think there will still be demand for low CV coals. And most of the capacity that is being developed in China will be from mid CV coals. So for blending purposes, I think Indonesian coal would come in handy, when you talk about China. In terms of Japan and Korea, to be honest, I think we've already given our outlooks that 2021 will be a year where we are seeing some positive growth. But apart from that, I think CRU as well as I think IHS are on the same ground in terms of reducing imports in that region. But yes, I think we'll have to kind of think of ways to kind of provide more higher CV coals in those jurisdictions. And I guess that will be the strategy that the Japanese and Koreans will be following.
Okay, thank you, Mr. Manjot Singh. So there is still opportunity for low coal CV in China, yeah, in the future. Okay, James Stephenson from S Markets.
Yeah, look, I think as you get increased renewable penetration into Japan, Korea, China, it doesn't necessarily make annual demand more volatile, but so you certainly get sort of intraday and so forth becoming more volatile. One of the challenges that it can raise is that plants that you want to run as base load, 80-85% capacity factor, may not be able to. One of the things we've seen in Europe and in the United States where coal's really been challenged by renewables and gas is that economics of plants become very difficult to maintain because they're just not running as much as you would like them to. Look, I think in general, increased volatility equals increased risk. And when you have increased risk, you want to reduce risk. And I think probably the best way to do that is, and I feel like I've been banging this drum for a number of years, but if you can hedge more, you will be better able to deal with any sort of volatility. If you can procure more coal forward, not 5 years or 10 years, a year, if you can hedge on financial markets, then you can sell your power forward as well, and you're better buffered against volatility from increased wind or solar or more gas generation or whatever.
Okay, so I suggest to use the hedging mechanism, yeah, to hedge the
Exactly.
potential volatility in the market. Okay, thank you, James. Pak Hari Kristiano, from your experience perspective dealing with the procurement in JKT area and also China area, what is your view on this?
Yeah, that I see for the GKT, especially Hendra, that we see that, so renewable will be coming, but now that I see this is need time to coming and will be disrupt to the coal procurement, and this is will be not happen in the one day and will be disrupt everything. But again, they will be going there, and it's mean is. But again, for the base load, I think that my experience in the GKT and the buyer of the Japan, they want to not put all the risk to the renewable energy. Then we think about the continuity, base load, the coal that I see still become the base load of the electricity. And again, but if you see in the next 20 years, the coal demand will be reducing. But again, I see that Indonesia is domestic for the scenes like downstream coal gasification will become need domestic more. So it's mean will be swift from export because reducing the GKT demand is coming back to Indonesia for the Indonesian domestic obligation. That I see.
Okay, thank you, Pak Chris. Next question from Pak Simon Juntak. He's asking about the competition with Russia. Russia is now the Indonesian biggest competitor to fill in the demand in the JKT. So the question is addressed to Mr. Manjot Singh. Pak Simon is asking about the competitiveness, cost competitiveness of the Russia coal, compared to Indonesian coal. Do you have any, overview about this and the cost perspective?
Yeah. See, I think this is a question that needs some demonstration. I don't have the numbers off the top of my head. I can quickly share my screen with you if that's fine.
Yes, please.
So I have very quickly plotted. So this is our web platform. I very quickly plotted a global thermal coal industry cost curve, excluding China. And you can clearly see the competitiveness of Australian, Indonesian, and Russian producers on your screen. I was saying that Indonesia will face more competition, say from the likes of Australia and Russia. So the blue colored ones, the capacity in blue is of course Indonesian capacity. You can clearly see that a lot of that occupies the second and the third quartiles. Whereas if we talk about Australia, a lot of the capacity, Australian capacity and even Russian capacity lies in the first and the second quartile. So of course, we can, of course, talk at a micro level as well based on certain assets. But I've just given you a very quick overview of how the competitiveness looks like. Just based on this chart and of course, based on our research, we clearly think that Indonesian supply is slightly uncompetitive when it comes to, say, the more competitive Australian and Russian producers.
Okay, thank you, Mr. Singh. Mr. James Stephenson, do you have anything to add on this, the competition from Russia and the cost perspective?
Look, I don't have a whole lot to add. I know one comment I would add is that Vladimir Putin is, well, as of since the US election has passed, I think is the only head of state who's sort of actively pushing coal and is pushing, sort of an investment thesis and heavy investments into rail lines, a number of ports and so forth. So I completely agree with what Mr. Singh says. I suppose the fear might be that we get some sort of subsidy mechanism as well that helps push Russian even more competitive. But no, I think everything else Mr. Singh covered.
Okay, thank you, James. Pak Chris, you mentioned about the potential another competitor from beside the Russia. I think the US also is a competitor to the JKT market. Yeah. So Pak Chris, how do you see the US and also potentially Colombia? Yeah. How competitive they are?
Yeah. I have old data actually from EAA in 2019 that I got it as the structure or cash cost of the Australians, Russia, South American, Colombia, and also Indonesia. Also, we can compare to that I have is from US is the cash cost is for the Australian is around $53 per ton, and compare Russian mainly 53 is due to Australian cost of the mining is around $30 and around $10 for transportation, and rest of that is for the royalties. But for the Russian is the cost of the mining is very cheap, so only $2. But again, it's almost 40 to almost $32 is to end up with a $52 is the inland also the transportation cost. So then they need the subsidies for the transportation, otherwise they will be difficult to compete with, especially for Indonesia. Indonesia is around the cost of the mainly of the cost is for the mining is around $25, and the other is cost of the transportation, because we are usually using riverways, so they end up with a $40. So in the term of this cash cost, Russian will be difficult. But again, the Russian will be having advantage in the freight. For the Colombian that you're asking is, Colombian will be supply will be wind, will be low, but again the cash cost they're not far from Indonesia. But again, if they will be freight goes to the Indian or to the JKT, will be no advantage anymore. But again, for the challenging is from South African, and also, but again for the JKT also, South Africa is very very far. So in the term of the cash cost is Indonesia having advantage as long as the freight will be low. That's my point.
Okay, thank you, Pak Chris. James, with the new administration in the Washington DC now, is there any potential additional tonnage from the US coming into the JKT market in the next future?
Look, it's. I mean, directionally, it would be less likely now. I think, we have coal from the Signal Peak mine in Montana, and then a little bit of northern PRB coal that comes in. I don't think we'll get any more US thermal coal into JKT. The only low sulfur stuff that would work is far too expensive out of the East Coast, and I think we'll keep getting that Wyoming and Montana coal coming in. The new, relatively new Vista operation has obviously gained some traction too. Some of these coals also get pulled into places like Chile and to a degree Mexico as well. So competition isn't just for suppliers into JKT; it's also on the demand side for some of these suppliers. So in terms of Biden, I think there are far more risks to the that would hurt US exports. I don't think we'll see massive changes, honestly, in the next 4 years, and it's not a big thermal exporter anyway.
Okay, thank you, James. Manjit Singh, Mr. Singh, do you have any different opinion than James on the potential the US?
Yeah, I think, of course, first of all, agree with James on the fact that the new president is, of course, not a big fan of fossil fuels. So that, of course, would hurt the domestic coal industry in the US. Secondly, even if you, I think, look back at the coal industry, my understanding is that US coal supply is driven by prices. It's it's the swing supply. So you cannot kind of expect US supply to be available at any given price point. So those are the two reasons why I would think that US coal might not be a long-term viable solution for the JKT market.
Okay, thank you, Manjat. Next question from another question from audience now is from Florencia Rizky. From Florencia. Question is how to build a sustainable coal marketing cooperation within Indonesia, in Japan, Korea, and Taiwan. I think I would like to address this question first to Pak Chris, as a players.
Yeah, interesting question. But before going to this question, I want to comment about the U.S. coal because U.S. coal is the cash cost is very, very high. So that runs 55, 56. So in the now time being is as long as the coal price it will be at the moment will be this number 80. So they will be having opportunity to come up to going to the Chile or going to the China or going to the India. So that means as long as the freight and also the coal price coal freight is lower and the coal price is within this number 80. So there will be chance to selling. But again, it's not quite big because the cost of inland transportation is very high. For them, it's around $72. So that for the questions from Florencia, right?
Yeah,
okay.
Florencia.
Or to Florencia, something. Rizky Mangwali. So how to build sustainable coal marketing cooperation between Indonesia and Japan. So I think that in my presentation, the number five, that I see for the Japans and especially Japans and some of the Korean buyer, they have a trading house. So for me is I'm dealing with some trading house. So it's quite easy to them. We can talk about term basis. But for the Korean and also Taiwan, usually they're using tender basis. So tender is usually 1 month, 1 year or half shipment. So it's quite transparent and spot basis. But again, if the 6 month or 8 month is quite enough for medium term to make sure our cash flow. But again, we love deal with the Japan buyers, especially when they are knowing the trading house and they have a relationship with Japan. It's quite easy to to deal with the Japan's buyer and Japan house rather than to the such as going to the Indian market that that's very low, very sensitive with the price. So that's my opinion. Thank you.
Thank you, Pak Chris. It's interesting. You've been dealing with the most lovable, customers in Japan, and also the most difficult customers India. Yeah, so you have covered both markets. Yeah.
That's correct.
Okay, Manjot Singh, do you have anything to add about the coal building, coal cooperation between in the JKT? Do you some advices on this?
Yeah. Was the question on sustainable marketing and sustainability?
Right.
What I can say is that I think one thing that had caught my attention last year was a partnership between BHP and one of the leading Chinese steel makers by the name of Baowu Steel. So again, and the main focus of that was sustainability and a drive to lower emissions, scope 1, 2, and 3 emissions. Again, it wasn't a lot that came out of that, apart from the fact that both the companies would be doing a lot of sharing in terms of technical knowledge, and of course there will be a lot of R&D done so that the steel maker can reduce its emissions, its direct emissions. So I think that could be something that, and I'm pretty sure that in Japan, a drive to reduce scope 1, 2, and 3 emissions is just as strong as in any other part of the world. So if there can be more technical knowledge sharing and a bit of an R&D that, say, some of the big Indonesian companies can do, which kind of markets themselves as companies that are able to kind of limit or at least reduce some of the direct emissions. I don't know what the marketing message can be. As I said, I don't know how to answer that, but I can just cite this example which has taken place. Steel industry, again, is a very, very carbon intensive industry. So if something we can do on the power and thermal coal industry as well, when it comes to marketing collaborations, I think we could look up to that collaboration and draw some conclusions from that.
Okay, thank you, Mr. Singh. Question from our friends, Pak Ayan Wolf. Question addressed to James. James, you mentioned about using hedge mechanism. So Mr. Ayan Wolf asked question is, can renewable hedge forward power prices?
Can renewables? It depends on the market that you're in. If you're in a renewable generation, if you're in a competitive market, then usually what utilities or power producers will do is they'll have a portfolio. So they'll have maybe some coal and some gas and some renewables, and they will hedge, a certain portion of that, and they'll save a certain portion to spot. If you're not in a competitive market, renewables might be sold via PPAs and power purchase agreements, that kind of thing. The answer depends on the market. Now, and I suppose it's an important one, as the Japanese market gradually becomes more of a free market, then certainly being able to hedge on the power side will become more and more possible. You'll be able to lock in dark spreads, but in terms of renewables, they're bid very, very cheap. If you own them, they'll run. Their variable cost is very low. So if you have the thing, you want it to run every time it can. So hedging would be more around, just how much, if you have a lot of sunny days or weather type stuff. But in general, in a competitive market, you can hedge.
Okay, thank you, James. So, Pak Adianto, anybody from the audience would like to raise hand to answer directly to the panelists? Pak Adianto?
Thank you, Pak. Henry, actually, one Yumil Akbar. Hello? Hello, Pak? Hello? Oh, it doesn't work, Pak.
Okay. So we still expect. Belum ada ya. Okay, so this is the closing session. So I would like to all its panelists to give 1 or 2 minutes closing statements of what we have discussed so far, or anything you would like to add, please. Mr. Manjat Singh first, and then followed by Mr. James Stephenson and Pa Chris.
All right, I guess my closing remarks would be, and I think all of us, or most of us, are on the same page in that yes, while in the short term there are some upsides to demand, although moderate upsides. In the medium term to the long term, yes, there are some challenges in terms of demand for thermal coal in these regions, especially JKT. But that, at least from my presentation, I wanted to convey that that doesn't mean that it's the end of the road for Indonesian miners, or thermal coal prices are only going to go downhill, because we are expecting that thermal coal supply increments are going to be challenged as well. Not a lot of capital is going to flow into financing thermal coal mines, both greenfield and brownfield. And therefore, at least if you talk about 7 or 8 years from now, we could still be looking at a relatively tight market. And for those reasons, good assets, or like good capacity, competitive capacity, healthy assets will still be generating good returns. So yes, while there's not a lot of upside on the demand side, it doesn't really mean that we are staring at a low thermal coal price environment. Thermal coal prices could still remain relatively healthy because the market will still become tight because of dwindling supply. That's all I have to say. Thanks.
Okay, thank you, Mr. Manjat Singh, Senior Consultant, Commodity Markets, Metal and Mining, the CRU, the crew. Okay, Mr. James Stephenson, your closing remarks, please.
Yeah, look, I usually try and be positive in these things. I suppose one I would say is that having been in the States during the decline of coal demand there, the decline happened faster than everybody thought. And I would say that's also the case for Europe. So I look at our outlook for Japan, Korea, and Taiwan, and obviously different dynamic. You don't have gas, but you do clearly have an appetite to move away from coal. So I suppose I would just say there's maybe a bit more downside risk to our forecast than upside. But then against that, I would urge, actively engage with customers in ESG, for example. If you can help offset your own Scope 3 emissions, that may work to help support a little bit of that coal demand, particularly in some of these countries that sort of have announced targets and are being a bit more aggressive in moving away from coal.
Okay, thank you, James Stephenson, Senior Director of Research and Analysis for Coal, Metal and Mining IH Market. Okay, Pak Hari Kristiono, silakan.
Thank you, Pak Hendra. That's interesting especially for GKT, the country that will, for us, for the miners' perspective, is very important. Even they only 6 to 7% in the country destination from Indonesia, compared like China, and then last year they are almost 30%. Also India is 24%. But if we are talking about 7 multiplied by 3, so it's near by the Indian country destination. So it's mean that I heard about the JERA putting coal terminal, and the new coal terminal, they will be put like all the coal from Australia, from Indonesia, put the coal terminal blend together, and after that they're sending to the power plant. And my closing statement, why they build coal terminal in Indonesia and make sure the coal will be suitable with the requirement, rather than buying from the others, the miners, that the variation of the coal quality will be issue. So that's my invitation to the coal trader or coal buyer or trading to build a coal terminal in Indonesia. Thank you, Pak Hendra.
Okay, thank you, Pak Hari Kristiono, Chief Operating Officer of PT Medco Energy Mining International. Okay, so it's been very fascinating discussion. So we covered the JKT market, Japan, Korea, Taiwan market, the market that even though is much smaller compared to India, but the region has been the Indonesian traditional market, and it's used to be the very stable market for Indonesians exporter, but since a couple of years ago and predicted in the next few years, the market will be very tight due to the, among others, the competition, tough competition, especially from Russia. We're talking about the South Africa as well, and competition with other community, especially gas, and also the rise of renewable as the JKT country is trying to compete with their neighbors in terms of carbon neutrality, as the presidency administration in China has announced that the country will become the carbon neutral by 2060, and Japan, Korea, and Taiwan will follow the suit. And especially South Korea is very aggressive in reducing the coal capacity and improving the other renewable energy and other gas. Yeah, so the market will be very tough in the future, but using the hedging will be one of the consideration, and also the importance of ESG in this case is also very something that the Indonesian producer will have to look at it, and funding will be very tough in the future. But there is still opportunity even for Indonesian coal, low calorie, especially in the China market. And as Pak Hari suggested, that building the coal blending terminal is something that Indonesian producer will have to consider. Yeah. So thank you very much all the panelists for the excellent presentations and answer and inputs, and you have contributed to the discussion in the afternoon. So thank you all the participants for the question. It's very interesting, and I'll get back to Pak Adianto, the organizer of the seminar, to close the webinar this afternoon. Thank you very much.
Thank you, Pak Hendra. Okay, ladies and gentlemen, thank you for staying with us for the last 1.5 hours. I believe we all agree that this has been a very fruitful discussion. And once again, on behalf of Coalition Petromindo, we would like to thank to all presenters, Mr. Manjot Singh from CRU Consultants Singapore. Thank you very much. And Dr. James Stevenson from IHS Market joining from Sydney. Thank you, Mr. Stevenson.
Thanks.
And Bapak Hari Kristiono, COO Medco Energy Mining International. Thank you, Pak Kris.
Thank you, Udesi.
And also our moderator, Bapak Hendra Senadia, Executive Director at ICMA. Thank you, Pak Hendra.
Okay, terima kasih. You're welcome.
Thank you all for taking the time out of your busy schedule to attend this webinar. And a sincere appreciation to our wonderful partners and sponsors, PT Tribhakti Investama and PT Geoservices. Thank you very much for your great support and contribution. We hope to see you all again in our next webinars. Don't forget to visit our websites, www.petromindo.com, for update news in energy industry and information about our next events. Okay, everyone, please stay safe and healthy. Goodbye and good afternoon. Thank you.
Thank you.
Thank you.
Thanks, everybody.
Manjot, Pak Manjot, Pak James, thank you very much. Have a nice evening in Sydney.
Yeah, you too.
Yes, thank you, Pak
Pak
James.
Kris.
Thank you, Pak James.
Thanks, Pak Adianto.
Bye.
Pak Adianto, Bu
Ya,
Desi.
Pak Hendra, thank you, Pak.
Ya.
Thank you, Pak
All the
Kris.
participants.
Thank you.
Okay, stay safe.